It's time to buckle up, Buttercup, because the upcoming trading week is bound to be a crazy one. I'm talking about high-tension trade wars. I'm talking about pivotal macroeconomic data drops that tell us what in the world is going on in the economy, and I'm talking craziness in the options market. And of course, in this video, I'll be breaking it all down. I'll let you know what to pay attention to, and of course, I'll be giving you my own thoughts and opinions on where I could see this market going. But first, I would love to hear from you in a comment below. Are you buying this dip, or do you think that there's more pain to be had? And of course, if you enjoy these type of market breakdowns, let me know by hitting the like button. Don't forget to subscribe. With that being said, let's rock. We are one trading session away from starting an entirely new month, and things are not going so swimmingly. To close out the last trading week, Friday, March the 28th, here was the official headline. Dow closes 700 points lower as inflation and tariff fears worsen, and man, oh man, was it a bit of a bloodbath. On the screen now is the heat map of the S&P 500, and yeah, you might be able to say healthcare and utilities were a little bit spared, but beyond that, the entire situation is kind of brutal. Looking at the SPY on Friday, it dropped 2%. The Nasdaq dropped 2.6%. We have volatility ripping, picking up 16%. And in real time, Bitcoin's kind of getting its nuts kicked in, and it's just above 82,000. By the time you're watching this, maybe things will be a little bit more repaired, a little bit more constructive. But I think there's better odds than not by the time you're watching this that things are actually worse off. And man, oh man, when you take a step back, you realize how bad really is. We hit an all-time high in mid-Feb. Since then, lower highs, lower lows, an absolute puke, and then a little bit of a bounce here. And the question was, is this the dip to be bought? Are we going to rip? Or is it a little bit of a dead cat bounce, and all of a sudden you realize that you have, whether you want to call it a bear flag or a bear channel or literally just a failed bounce, regardless, we snapped this trend line, we puked, and it looks like there might be more pain to come, and that's exactly what I want to talk about in this video. What is the high odds pathway? What is the most likely pathway? Are we going to put in a higher low and bounce and recover? Or is this literally just a dead cat bounce? We're going to come down and just puke? Or is it going to be a double bottom? That's everything we're going to be getting to in this video. So to understand really where we're going, let me quickly touch on what happened and why last week was so brutal, at least at the end. And it's because of the trade war situation. Trump announces 25% tariffs on all cars not made in the US. This was that big midday announcement that caused us to go from a nice green gap up and a push to all of a sudden we were really puking. And if you were wondering, Trump in the short term doesn't seem to be so remorseful. Trump says he quote unquote couldn't care less if car prices go up. That was just reported this weekend. Obviously not exactly what you would want to hear going into quote unquote Liberation Day. But before we get to that, let me give you the real rundown of last week. We gapped up on optimism that maybe this trade situation is not going to get so bad. And if anything, there was optimism because there was a lack of negative news. So people are like, okay, maybe this is good. And then before you know it, on Wednesday, after the market closed, we did hear from Trump. And that's exactly where the market started to turn because we all knew that there was this big announcement from the Oval Office, a little bit of a pause day. And we caught ourselves at the trend line and people said, maybe it's going to bounce. And then that brought us to Friday where just obviously the wheels came off the train, and it had to do with inflation. An hour before the market opened on Friday, we got the PCE report, the personal consumption expenditure, which according to the Fed, they weigh that inflation report the most. And the fact that they came in higher than expected means that the Fed says, oh, crap. So it created this entire situation, and the TLDR is this. S&P 500 erases $2 trillion in 20 trading hours. The S&P 500 futures erased $120 billion after hours. So it just got really brutal into the conclusion of the week, which is now bringing us to this exact point of what in the world is happening this upcoming week. Well, to start this off, I always want to review seasonality. The start of April is seasonally very bullish. In fact, the entire month is very bullish over the last 3 decades. More recently, in the past 5 years, you can see that the month of March slightly green and the month of April actually even more green. And for those of you who are curious about the weekly view, you can see that the the first week of April, a little neutral, really more so slightly bearish, but it's the second week of April that is dominated by the bulls. So this is seasonality. This isn't the end all be all. This is just how the market has played out on various time frames historically. And like I said, is it a guarantee? No, but there's a reason in the market we have this saying, the market doesn't repeat, but it often rhymes. So I just like to set my bias with that. But really what's going to influence the market this time around is pretty much everything I've already been alluding to. We have a lot going down this week. So Monday, March 31st, to conclude the calendar month, we're going to get a PMI data drop. Not the most important thing, but what is really, really important is this is the expiration date of JP Morgan's collar position. JP Morgan, one of the world's largest banks, has a giant collar position on. And that's not really the point of this video, but a collar position is when you own the underlying, you sell calls on top to create a ceiling and you collect that premium to buy free downside protection. That free downside protection, the puts that they are long, expire Monday, March 31st, and man, oh man, is it having a giant influence. So you can see it right here. I mean, I'm talking, what is this? 44,000 puts, long puts at the strike of 5565. I'd also quickly bring your attention to right here where you can see there's way more puts in play than there are calls. We're talking about 4 to 5x more puts in play for Monday's expiration, which means very much watch 5565. If it starts to break, things could get very gnarly, but it also might end up acting as support based on where we are right now. It's just various levels to pay attention to because the market's not open yet. So I just wanted to show you this is a high level of interest. When I'm saying the actual influence on the market, you can see it from the gamma map right here. We are in a lot of negative gamma. Remember, negative gamma is not bullish or bearish. It just means price action is slippery. When you get going in one direction, you're going to keep going in that direction. And if you have positive gamma, it's the opposite. It's more of sticky price action. But right now, because of that position from JP Morgan, watch 5565. It expires on Monday. And then, of course, afterwards, we're going to realize where they're able to roll the position to. So pay attention to that for probably most likely the Tuesday update video. So that's what you have to pay attention to on Monday. And that's already quite a bit, but this is just how we're getting rocking. Now let's move on to the next day, Tuesday, the first day of a new month, April 1st, aka April Fool's Day. And yes, once again in the morning, we do have some early announcements right when the market opens, something worthwhile to pay attention to. I'm going to personally care a lot about the JOLTS job openings just to try to get a better understanding of what's going on in the overall labor situation of the market. But this is kind of an in-between day because the very next day, not only do we get the ADP non-farm employment change, but April 2nd is what Trump is referring to as Liberation Day, when we're supposed to find out more about the tariffs. Like, this is supposed to be the big tariff announcement day. And as of right now, heading into it, things are getting a little bit saucy. Trump says he's very angry when Putin criticized Zelensky's credibility. That's just coming out this weekend. Trump then followed up by saying, I'll slap 25% tariffs on Russian oil if Putin drags out the war. If Russia and I are unable to make a deal on stopping the bloodshed in Ukraine, and if I think it's Russia's fault, which it might not be, but if I think it is Russia's fault, I'm going to be putting secondary tariffs on all oil coming out of Russia. I was very angry, pissed off when Putin said getting into Zelensky's credibility and started talking about new leadership in Ukraine. And then from there, it got even a little bit worse by saying it might not just be 25%, in fact, it might be up to 50%. Trump says such a tariff on Russian oil would range from 25% to 50%, obviously 25% being the bottom. So clearly tensions there, a little bit crazy, but it didn't stop. According to Trump, US and Iranian officials are talking. That sounds good, but then right after that, Trump threatens a bombing and secondary tariffs on Iran if Tehran does not make a deal on nuclear program with the US. Talk about uncertainty, tensions boiling over, not so good, but also it's not all bad news. We got a little positive update related to Canada. Trump says first call with newly minted Canadian Prime Minister was extremely productive. This was also reciprocated on the Canadian side, saying, okay, things are calming down a little bit. So it's not all completely high uncertainty, high tension, chaotic news, but that is more so of the land that we're currently living in. So basically, really pay attention to either what is or isn't said on Wednesday, obviously then bringing us to Thursday, which who knows what the blowback from all the Wednesday discussion and announcements are going to be. But once again, on Thursday, we have more of a data drop. And then that brings us to Friday, where the first Friday of every new month, you get the unemployment report, obviously giving us an idea of what's going on in the labor market. And then to make it even more fun, Jerome Powell, the chair of the Fed, will be speaking around 11:30 on Friday. So the overall situation is very chaotic. erratic, very uncertain. And if you're on the right side of these moves, man, oh man, you can make a lot of money. But of course, if you're on the wrong side, you can lose a lot. So please pay attention to your sizing. Please pay attention to your leverage. But for me, yes, I'll be paying attention to all these events. Yes, I'll be understanding the seasonality influences. But really, it does come down to me of tracking the options movement. Where is the big money going? Yes, I talked about Monday in the JP Morgan collar position and those puts at 5565 on SPX. I'm curious how that's going to impact the trading session on Monday, but more importantly, where it's going to roll so we know it for the overall next quarter. Are they bullish? Are they bearish? How bullish? How bearish? That type of a deal. But from market close on Monday, I still care about what's going on in the options market because right now we see some very interesting positioning. Quick side note, for those of you who are curious where I track my options information from, I think Spot Gamma is the best to do it. Obviously, use whatever you think is appropriate, but it is very, very, very difficult to be successful in any form of trading, especially in this current market, without knowing where the big money is positioned, which is really what I want to talk about right now. From a technical perspective, obviously the bears are in control. We have lower highs and lower lows. We just puked. We had a little bit of a failed bounce, putting in this lower high. You could call it a dead cat bounce. We snapped this trend line and we seem to be heading down. The question is are we going to put in a higher low, or are we going to put in a double bottom, or are we actually going to test this and puke? Obviously, no one can say this with certainty, which is why I care about where the big money is betting. Now, depending on the day of the week, this could change slightly, but what I really, really want you to know is that there's a large amount of bets at 5,550. If that holds, great, you might have a shot. The fact that we're on top of it means it could be support. We might get a higher low bounce, and cool, especially if somehow the news on Wednesday, Liberation Day, when we find about the tariffs, the trade war, whatever you want to call it, if that's all good, yeah, we could easily bounce here and just keep going. On the flip side, if the news is bad, if we don't hold this support, well, the next big level is pretty much the low of this recent push in mid-March, where we're talking about 5,500. That's the next key level to watch. So if that breaks, things could get legitimately bad, and then from there we might have another 2 to 5% sell-off in the overall market in a medium amount of time. I'm not talking about in a single day. That would be obviously a bear-dominated story. On the flip side, if things calm down and calm down quickly and we start to bounce off of any of these key levels, I would like to see the market take out 5,600. Once again, surprise, surprise, according to the current open interest, that's an important level where if we can get above it, we might actually start a very constructive recovery back to the upside. I think the appropriate way to really get into this is not being married to one bias or the other. You don't have to definitively be bullish or bearish. Do exactly what the market is telling you. Look at the price structure. Are we trending down? Are we trending up? Look at the momentum. Are we above or below the EMAs that you care about appropriate to your trading time frame? And then the final thing is check what's going on with options. Every single day throughout the trading session, on top of my morning prep, I'm always knowing where the biggest money players are, because I want to know, are they saying, hey, we're bullish and we think we're going to rally, or are they more so on the bearish side? So let's quickly review. To kick off the trading week, we're concluding the month Monday, March 31st. Yes, there are some data drops early in the morning, but most important is what is going to be that options influence of the JP Morgan put position, well, the put side of their overall caller position. Right now, we see that the overall chain, Monday, Tuesday, Wednesday, Thursday, and Friday, are all put dominated. We're in negative gamma. Is it going to hold? Is it going to support? Or are we just going to crater through it? Then when that position burns off and we go to Tuesday, we have another data drop, but there's going to be more so of the tensions heading into the next day, Wednesday, Liberation Day. Yes, we'll be getting more macroeconomic data drops, but the most important thing is what is going to be said about tariffs. Are they going to get amped up? Is Trump going to be pissed? Or are things going to simmer down and all the other countries are going to basically acquiesce to what he wants, and then it becomes a nothing burger? Heading into Thursday, surprise, surprise, more data. That's probably going to be the most calm day of the week. Maybe, of course, the others say it could be the most wild depending on the reaction to Wednesday. But regardless, that brings us to Friday. We're going to be concluding the weekly options. We're going to be getting the unemployment report. And oh yeah, Jerome Powell is going to be talking. With all that in mind, I think it's pretty evident that the upcoming trading week is going to be a wild one. I don't think you should be married to a bullish or a bearish prediction. Right now, the bears are in control from a technical perspective, from a momentum perspective, and from an options perspective. But remember, that can change on a dime. So for me, and this is just how I want to do it, I'm not your mom. Make the trades you want to make, but I always like to trade with that larger trend because I find that's when you end up getting more lucky. Don't forget to like, don't forget to subscribe, and of course, I would love to hear from you and how you're going to be playing the upcoming week in a comment below. That's what I have for you. I appreciate the good vibes. I'll catch you in the next one. Peace.